Hello, everyone. Welcome to this new online session from Impact Taxation and Financial Services. In today's session, we'll have a look at three-dimensional tax planning. So it's actually a new concept we have brought to the market. And then let's have a look at what it is. Right, let's go to the next page. All right, so what are the three dimensions? The first dimension is to have a look at each separate tax entity within the family group and then help that individual entity to maximize deductions. So that entity can be an individual taxpayer, it can be a company or a family trust, self-managed super fund. Yeah, so we'll look at them one by one to help each tax entity to increase the deductions. Okay. And then the second dimension is to look across the family group on all entities to minimize tax. So that can happen when a family group can include individuals and companies, family trust, all right? And then we basically need to look at what's going to be the total profit for the family group, and then which entity is actually the best or have the least marginal tax rate to receive the income. Of course, that need to be in compliance with tax office requirements too. Yeah, okay. So that's the second dimension. We normally do this before June 30. So first dimension, second dimension, with all the tax planning strategies, we need to implement before June 30 every year. So before the tax year ends. All right. And then the third dimension is actually look into the future to find the best ownership structure for business and investments. So basically that's to have a look at, I will give you more examples later, but it's more to say for an investment, especially for rental properties, what's the best way to split the ownership so that the family group will receive the most tax benefit. All right, that's just one of the examples. All right, so let's have a look into more details. So the first dimension is to add as much as possible undeductible items for each separate entity. Okay, so the first example we have listed here. For each individual taxpayers, we will help you to utilize our return template to maximize work-related deductions, such as home office, motor vehicle, tools and equipment, etc. Okay, if you're already our existing clients, you should be very familiar with our return templates already. So by filling in that template from beginning to the end, you're not going to miss any deductions because it will act as a checklist to help you to refresh your memory. All right, so on average, our clients are increasing their tax refund or saving their tax by about $200, $300 a year by utilizing our return template. Sometimes it can be up to thousands or tens of thousands of dollars. All right. And then the second example we have listed here is for companies and family trust. We can help you to utilize income splitting, FBT related exempt benefits, employee allowances, such as overtime meal allowances, or maybe travel allowance, okay, to maximize deductions. Yeah, again, if you are already our existing clients, we have helped you probably many times to utilize all those strategies. All right, so that's on individual entities. And then let's have a look at that second dimension. So that's to look across the family group on all entities. So examples we have listed here. The first one is decide the best way to distribute family trust profit to family members or related entities. So of course, the second dimension is actually built on the first dimension, if you think about it. So in the first dimension, once each individual have reduced, let's say if they have other income, and then they, by utilizing all the deductions, they actually minimize their taxable income from other channels. Then we'll have a look at out of all the family members, which entity is actually having the least marginal tax rate to receive more income from the family trust, after all the other deductions. All right. Then related entities can include, companies. All right. So sometimes family trust can have a bucket company, or a corporate beneficiary. Then once we distribute the income, and then if there are surplus, then we can consider to just distribute to a company structure, the company beneficiary. All right, then the second example we have listed here is how company owners to decide salary levels or other payments to themselves, family members, or related entities. So that's actually similar to the first example. I guess for company structure, the only difference is the owners need to decide salary instead of profit distribution, as a family trust. So recently, there are a lot of new tax office requirements, such as the professional form profit distribution rules. We need to actually add a lot more considerations into this second dimension, when we organize tax planning sessions with our clients. All right. So that's actually on the second dimension. That's from year to year, we look across the family group to have a look at which entity is the best to receive profit or income for the family group that actually have the least marginal tax rates. Okay. All right. Then the third dimension is actually looking into the future. All right. So the first example we have listed here is actually a tax forecast to future years and find the best ownership structures for businesses or investments for the family group to save tax in the long term. All right. And then the second one we listed here is cost benefit analysis when the business or ownership structures should be changed. So sometimes with investments, let's say, for example, if it's kept in a self-managed super fund structure, the tax rate is only 15%. All right. If you have surplus money, you don't really need it at the moment. You can actually invest within a self-managed super fund. And then you're going to receive a lot more balance after many years. And compared to individual ownership, that could be up to 47%, if you're a high income earner, or it can be, say, 25% in a company structure, or a family trust structure. It could be up to 47% as well. So that's an example to look into the future to see what's the best business structure that's going to give you the most tax benefit or the biggest balance for your wealth in the future. And then rental property, of course, as I mentioned, high income earners, if you attach more rental loss to them, they actually save more tax. And then on the other side, if they're already high income earners and then they receive more rental income, if it's a rental income or profit for the rental property, then they're actually paying more tax. All right. So that's actually looking more into the future to see probably the next 5 or say 10 years, how much balance you're going to left or leave for your wealth. Okay. One example I want to mention here, we actually had a real case scenario when the client came to us. He was considering to move a rental property to a family trust structure, but he was hesitating because there will be capital gains tax and stamp duty at the very beginning, because there's a change of ownership involved. And then, but through our tax forecast, the first 3 years, he's going to recoup the loss. Okay, that's going to cover the capital gains tax or stamp duty at the beginning. And then from year 4, the tax savings will be pure savings. Of course, there are other considerations such as asset protection. Okay, when you change the ownership structure, so normally tax shouldn't be, or tax savings shouldn't be the only consideration. But it's definitely one of the most important factors. Okay, you need to consider when you want to change the ownership structure. All right, the businesses is the same. Sometimes we actually do a small forecast for a sole trader client to show him that what if the structure is changed to a family trust or company structure, how much tax he'll pay from year to year. And then, of course, again, that's going to be on top of the asset protection advantages, okay, when the structure is actually under a family trust or a company. All right. So that's everything I wanted to cover. Here is a brief introduction about myself, so we can pause the video to have a look. Our contact details are here as well. If you have any questions, please feel free to contact us anytime. Yeah, give us a call, drop me a quick email, and we'll be more than happy to help you anytime. All right, so that's everything for today's session. We'll see you in the next session.